Hey, hello investors and future investors. Welcome back to the channel. My name is Tim, and on this channel, I show you how I use my portfolio in order to make weekly income. For today's video, we're going to be changing up our option strategies, and I'll be showing you an additional strategy that I have decided to add to the portfolio. Now, the reason for this is because the market is now hitting all-time highs. We need to adapt to the market changes. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. Now, like I said earlier, on this channel, I show you all the strategies I use in my portfolio in order to grow my portfolio on a weekly or monthly basis. Now, for today's strategy, it's going to be a bit different because the market is now hitting all-time highs. As you can see here, I'm now on the Spider ETF. So if I go to the 1 year mark, you will be able to see the chart and you could see it's literally right at the top. Now, on this channel, you guys know that I love options trading and it's going to be an option trading strategy that I will be showing you today. Now, if option trading is something that you always wanted to get into because you want to get some supplemental income in addition to your current job, then you have hit on the right video. You guys know how we do on this channel. We give you a complete walkthrough of the exact strategy and how to implement it. And that way, you could learn a strategy and most importantly, you could follow along. That being said, let's get right into it. So for today's video, we're going to be using the Spider ETF or ticker SPY. So now we're going to go ahead to trade SPY options and wait for the options chain to load. All right, so now the option chain is loaded. The first thing you want to do is make sure you jump over to sell and call. And then now you're going to adjust your strike date. So we're going to be choosing October 15th, which gives us just 1 day to expiration. So let's go ahead. We're going to click on that. Okay, so now that we have selected sell and call and we have selected our strike date, what we're going to do now is implement the first leg of this strategy. Yes, this is a 2-leg option strategy. So now we're going to go ahead and we're going to choose our strike price above the current share price. As of making this video, the Spider ETF is trading at a share price of 581.19. So we're going to go now and choose a strike price above the share price. Now, as usual, I love looking for a chance of profitability of 80% or higher, and that is just based on my own risk tolerance and me being trading for more than 5 years now. So, with the 80% chance of profitability I'm looking for, I'm going to be going with the 584 strike price, and that's going to give me an 86.93 chance of profitability. The chance of profitability is going to be highlighted right above this column right here. Now, with the $84 strike price and a chance of profitability of almost 87%, that's going to pay me 0.31. Now, the reason why it's going to be paying me 0.31 is because I'm actually selling something. Whenever you sell something, you receive money or something in return. Now, this is the first leg of this option strategies. And as you can see to the top here, that's going to be the covered call option strategy. The covered call option strategy is a very good introduction strategy for anyone new to option trading. So please go ahead and search the channel. I have several videos on the covered call option strategy. Okay, for those of you that have not quite yet, now is a good time for you to go ahead and like the video, subscribe to the channel, but most importantly, share the video with someone you think that can benefit from his content. We're going to try to help as many people as we can in order for them to become part of the weekly income team. So now let's go ahead and choose our second leg. So now we're going to switch over the call side. We're going to go now to buy. And once again, make sure it still says call. So previously we had sell and call. Now we're going to make sure it says buy and call. We're going to go ahead and check our strike date. We're going to use the exact same strike date, which is going to give us just 1 day to expiration. Now, once again, we're going to choose a strike price not only above the share price, but we're going to choose a price above our previously sell call. So now I'm going to be going with the 585 strike price. Now, the 585 strike price is going to charge me 0.19. Now, the reason why I'm being charged is now I'm going to be buying a call as opposed to previously where I sell a call, I receive something. Now I'm going to be buying it. So let's go ahead. We're going to click into it. Now, if you guys see to the top, this option strategy is none other than the call credit spread. Now, like I said at the beginning of this video, the reason why I choose to now implement call credit spread as part of my diversified portfolio is because the market is hitting all-time high. And what this trade is actually saying is that I am betting that come October 15th, the Spider ETF is not going to be at 585. So let's go ahead and explain the trade. So let's go ahead to continue. I'm going to choose the amount of contract, which is 1. And then now we're going to go ahead and hit review. So let's break down the trade. So like I said previously, this is known as call credit spread. The call credit spread is a two-leg option strategy that anyone could use, especially if you're trading with a small account. Now, once I do a call credit spread, I will be receiving about $13 into my portfolio. That money is going to be mine to keep no matter how this trade goes. In order for you to do this option strategy, you will be required to leave a collateral. The collateral in this case is going to be $100. What this tells you is that anyone new to option trading or anyone trading with a small portfolio could very well implement this option strategy because the cost of entry is bare minimal. Okay, so the first part of the option strategy is going to be selling to open, and the second part of the option strategy is going to be buying to open. Good. So, what desired result do you want from expiration date of October 15th? Well, let's get into that right now. Okay, come expiration on October 15th, the ideal situation for us is that Spider ETF is going to be trading at any price below the 584 mark. Now, the 584 mark, if you remember clearly, that was our sell call. So, any price below 584, what that's going to do for us is that we're going to go ahead once again and keep our premium. Like I said, that's yours to keep no matter how this trade goes. And now our collateral is going to be released back to us. Now you could rinse, repeat, and keep doing this strategy until you are assigned. Now, there's another way this trade could go. That way is, once again, come October 15th, if I is trading for any price above the 585 mark, then now, once again, we keep our premium, but now we lose our collateral. Now, the amount of money we're going to be losing is going to be the $100 minus your premium, which is going to be roughly around $87. So keep that in mind. With every single option strategy, there are risks and there are rewards. Okay, so like I said earlier in the video, the reason why I decided to now implement the call credit spread in part of my portfolio is because the market is now hitting all-time highs. And I do not believe that this could continue going up in such a short space of time, which is just 1 day to expiration. As you all know, the market fluctuates, so it doesn't keep going up in a straight line. So come in the near future, I will be implementing the call credit spread a lot more than the previous strategies that we did feature on this channel. So thank you guys for watching. And once again, remember to hit the like button, subscribe to the channel, and share the video with anyone you think can benefit from its content. And in order for you to continue being part of the weekly income team, there should be 2 videos appearing right now. Feel free to hit any one of them, which is going to continue to expand your knowledge on option trading and how you could use this add to your regular job to make some side income. And until the next video, wishing you investments.